Let's go. The Claypool Group, Mortgage Lending, the Reitz Real Estate Team, Greg Reitz Real Estate Team, Fresno, Clovis, Madera, California. We service the Central Valley, and we've got the truth here. No suits, no ties, and no lies. That's what I got to tell you. And
hey, but I do like a good suit sometimes.
Yeah, I like a good suit. I just don't wear the ties because they get the lies. But let's go, man. It's a great real estate market, man. I'm pumped. We've got about 14 escrows on the board. For those that don't know, that means homes and transactions with buyers and sellers in place, ready to close. So there's all kinds of movement out there, buyers and sellers. It's time to buy and sell. That's what time it is. We got about 16 listings. Let's go.
That's amazing.
Rock and roll. So when they say the market ain't good, somebody lying to you. There's buyers lining up, sometimes multiple offers. So we're going to give you guys, Corbin, how's your day going today?
It's going great. Love being on here. Thanks for having me. Excited to do the podcast again. And so let's get into it.
That's right. Let's let them know why we are the real estate team and mortgage team of choice by giving them the truth, by running the numbers. We understand our analytics and what's going on in the marketplace, both on loans and homes and real estate in the area. And that way you can make an educated decision why it is the right time to buy, sell, or invest in real estate. Serious. Let's go. So, let's start you off with the mortgage rates. Everybody wants to know what the mortgage rates are doing, where you expect them to go, what kind of loan programs are out there, Corbin, and how's the market doing in the loans?
Awesome. So, I pull up Mortgage News Daily. I always tell people this resource because you'll see a lot of stuff online of teaser rates. A teaser rate is just a rate that is not 100% real. It's something that's just being shown as like a bait. And then you get in and find out, oh, well, because your credit is this or because it's that, it changes. So I like to point out Mortgage News Daily as a great resource because it shows true locked-in rates. Like, what are lenders truly locking in their rates today? And that is on Mortgage News Daily. We're going to have that coming to our website soon so that all the agents in our area and all the clients in our area can get accurate information on the market through my website. But as far as Mortgage News Daily today, the 30-year fixed rate is at 7.16. The 15-year, of course, the rates are going to be better on a lower term mortgage, are 6.58. You got your jumbos around that same ballpark as conventional, maybe a little bit less actually. We have great jumbo products. Our FHAs are going to be more in the mid sixes now. We're going to see it around 6.625. And then our VAs, closer to around 6.625. Now, keep in mind, these are national averages. So these are not, if you go to a different lender or whatever, or you come to us, we may be lower than this based on, what your credit is and your program and whatnot. But I just like to give the actual facts of what's going on in the nation. But as far as interest rates, we're likely going to see things hopefully come down a little bit. I don't think we're going to see things come down to the 5s or the 4s or, that far. But we may see them come into the low 6s. We actually saw that at the beginning of the year where the government products actually touched a low of around 5.875, 5.75, 5.625. And then we shot back up because the recent job reports that came out and the recent inflation report kind of turned the market a little bit. With the upcoming election, we should see rates possibly come down. We'll see what happens with that. Maybe they come down 0.5%. But that's my my mortgage news forecast on where things are headed.
Nice. And so now that we're talking about the loans and interest rates, what kind of a product can we get out there right now? For low down payment, USDA, Cal HFA. Can you share a little bit about those?
Yeah, absolutely. So we have every product that you could imagine. You've heard about them. The California Dream for All, which is coming out. I'll explain that in a second. You have your Cal HAFA loans. You have your GSFA Platinum loans. You have your Chenoa. So there are a lot of products available to first-time home buyers to help you get in a home and have your down payment covered. If you're a police officer, a firefighter, a medical person, a doctor, we actually have special programs for those fields of work that give you your funds in the form of a gift, meaning you do not have to pay it back. A lot of these down payment assistance programs you have to pay back. And there are terms on these programs that you want to be aware of that are really important that sometimes loan officers won't necessarily share. An example of this is if you get a Cal HAFA loan, you get your down payment covered. That payment, there's no payment on it, but it does have to be paid back. And you cannot refinance your first mortgage, which is very important, until that is paid off. Okay, so these are things that you want to know when doing these products. I think they're fantastic products to help people get into homes. I've seen people use them, get in, and then 3 years later, they have $50,000 to $100,000 of equity in their home. So they're great products to get you moving. The California Dream for All, which is the new one that everybody's talking about, is going to be in a lottery-based system. They have not given us a ton of information about this product yet, but it's going to be based on a lottery-based system to where you enter into a drawing essentially, and they're going to pick, a few vouchers, I guess, on who's going to get this product. There's going to be some stipulations with that one as well, but that's a great product because that's going to cover 20%. Yes, 20% of your down payment and your closing costs. No money out of pocket. However, Cal Haffa or the agency is going to keep 20% of your appreciation. So if that home appreciates $100,000 in 5 years, Cal Haffa is going to keep 20,000 of that $100,000. But I don't know about you, Greg, but if somebody's giving me 20% down for my down payment and closing costs, they can gladly have the 20% appreciation because you are basically getting into an asset for free that's going to appreciate and make you money in the long term. So there's a lot of great products available to new home buyers, to even current home buyers, veterans, things of that nature. Feel free to reach out for more information on these.
Yeah, and we just been working with some people. We're getting smart, right? Being in the industry for 18 years and yourself many, many years. And by the way, being top quality and closing transactions per year, me and Corbin, that relates. That's not patting us on the back. That's relating to experience and taking care of our clients. That's why I say that. You want to be taken care of. We've got the tools and the experience, the personnel. People been utilizing this 2-in-1 buy down where we've got people into homes, and let's say the rate's 6.5, 6 3/4, and we're getting them bought down, and the seller's paying for the buy down, right? For about 14, 15,000. Seller pays for the buyer, seller pays for the buyer. The buyer doesn't come out of pocket and gets a 4.5% interest rate, 4 3/4% interest rate, 5% interest rate for 1 year. It's fixed, but for 1 year, it's let's say if it's 6 3/4, it's 4 3/4 for year one, brings down your payment $600, $700, $800 a month, huge difference. And then the second year it adjusts up 1% or from 475 to 575, giving you an experience here, and they're still saving $300-400 a month. Then it adjusts 30-year fixed to that 6.5 or 6.375, whatever it was that you signed up for when you made that transaction, that deal happened. The reason I say that, buyers, is that's out there right now. It's popular. Number one. Number two, the rates are expected to go down in the next 18 months around the 5.5% rate range. Could be lower. Fours, no, 3s and 4s. Those days are over. Please throw that in the trash and let's get over that now. It's going to be 5 to 6. That's where it's been historically for 80 years. We're getting back to that now. They're proving it, and getting those low 5s will be looking good, guys. So that's what's happening out there, and we're getting people into homes this way. So they quit throwing that money away. They quit renting. The cost of renting versus buying is so much worse than buying. Even at 6.5% interest rates, Corbin, it doesn't make sense to rent. So we have got to get you guys into homes here, and we know how to make it happen with all the tools and experience that we have. Right, Corbin?
Absolutely. No, I'm happy you brought up the 1-1 buy down, the 2-1 buy down. We actually have a client right now that just went to escrow that's doing that because wife's on maternity leave and they want to have a lower payment temporarily until the wife gets back to work, right? And so we have this product catered to them where we got the seller to cover it, and they're getting their interest rate down 1% for the first year. It's just a 1-1. There's different products, 1-1, 2-1, 3-1. We can talk about them all on maybe another podcast, but 1-1, and it made their payment about $300 to $400 cheaper a month, putting them in a spot where they felt more comfortable to buy the home because they do know that the wife is going to go back to work after maternity leave. So these are scenarios that can help people for sure right now.
Absolutely. Let's rock and roll. Anything else you want to share on the mortgage loan side of it, or you're good?
No, man, I'm good. Thank you for giving me a chance to speak.
And in your professional advice, it's the right time to buy and sell with everything going on, correct?
I think ever since I've been in this industry for the last 6-7 years, it's always been the right time, even though sometimes the news says it's not the right time. Guys, homes have consistently appreciated. People have this bad taste in their mouth, and I bring this up a lot from 2008. They think, oh, it's going to be the next 2008. But the reality is, look historically at real estate. 2008 was a unicorn event. It was a black swan event. It was different. It's not the same that's happened previously. We've had some recessions in real estate. We've had some price drops in real estate, but we never had it to the effect that people forget that did not happen because of, happened because of the economy, but it happened mainly because of the mortgages that were being given out, which were crappy mortgages. It got super just, hey, anybody can get a loan, stated income, negative amortizing, meaning your loan goes up, putting people in bad situations and buying. And now when they came in, they re-regulated everything. So not only do we have no inventory that continues to drive prices up, but we have a mortgage market that has very strict guidelines for people to qualify and buy a house. The market is not crashing anytime soon. So buy and wait. That's the way that you buy real estate.
And let me share one more thing before I get into these specs on the real estate market that's going to be important. Buyers, the cost of renting versus owning, the cost of renting versus owning. And some of this also plays in sellers, the cost of hanging on to that property because you got a lower interest rate maybe versus making that move to what you want right now. Okay. The cost of renting versus buying is this way. Let's say, Mr. Buyer, you're paying $2,500 a month for rent. Pretty normal right now, Fresno, Clovis, Madera. $2,500 or $2,250. Let's use $2,500. In 1 year, that's how much? That's correct. 2,500 times 12 is $30,000. I'm going to write these numbers down. $30,000. What we're saying here now is we hear a lot of buyers saying, not a lot, we have a few buyers that aren't understanding the truth here on the market, what the cost of waiting is. So we're going over, buyers, what the cost of waiting is. So let's say we're paying $2,500 a month times 12. That's $30,000. 30,000. Write it down, guys. 30,000. Okay. So the cost of waiting a year, 1 year, is 30 grand for rent. Now we take the second part of that and we say, what's the cost of the house going to be in a year? Buyers, it's not going down. Those days the real estate went down 8.5% approximately, almost 9% in 2022. Since then, they've been going up normally. So it's not going down. Those days are over. So we're going to go up 8% is normal to figure it out. So the average house is about 400,000 right now. I'll get into those details in a minute. Let's use 400,000, 400, 8% in 1 year, 8% in 1 year in value equity, which is normal here in the United States, in California and Fresno. So 8 times 4, that's $32,000, $32K in equity in value. The home goes up $32,000 in price. Okay, that's number two. They got two figures at 30,000 or more already. You're losing on, right? The third thing you're losing on is you're not capturing that equity. You're not capturing that higher price, right? Thirdly, but the thing is, you're losing $30,000 in rent. You're losing $32,000 in price, but there's a third way you lose. Do you know what that third way is, Corbin, by any chance?
Tell me.
Well, here's the third thing. You're giving away your rent. You're paying $32,000 more for the price of the house, right? You're losing the equity. That's really another $32,000. We talked about that. But when the rates go down, because that's what they said they're waiting for, some of the buyers said, well, I'm going to wait for them to hit around 5.5. They're at, let's say, 6.5 right now. So that's a percentage point, right? Well, the price of the house at 400,000 with a point difference is about $322 a month difference at 400. 322. We take the 322 times 12 is less than 4,000. So $4,000 is what you're spending to buy now. Okay, that's what you'll save if you wait. The problem is that $322 that you think you're saving, you're not saving, Mr. Buyer, because of that interest rate point. It's $322 at 6.5 versus 5.5 at 400,000 approximately. Okay, follow me here. So $322 is what you're looking to save. The problem is your house is going to go up $32,000 approximately in the next 12 months, and $32,000 is going to cost you more than $322 a month. So my question to you, Mr. Buyer, did you save money? No, you lost money. Plus, you lost money on the rent of $30,000 you kept paying your landlord. So you're losing about $62,000. It doesn't matter how we look at it. You lose three ways. So now is the time to buy. How do I know? I bought real estate recently. Higher rates or not, doesn't matter. You bought real estate recently, right, Corbin? Higher rates or not.
I'm buying as much real estate as I can, especially here in Fresno, California.
Real estate, man. That's what we do. You know what I mean? And it makes money. So that's it, guys. Any questions, you call Greg Reitz, 559-260-1777. You call Corbin and his number, ticking on the bottom of the thing, and I'm going to get into my nuts and bolts of real estate stats right now.
Perfect. 559-313-5819, guys.
You got it. Here we go. That's what I was waiting for. Guys, here we go. The housing market, real estate, Fresno, Madera, California. Guys, we've got 1,545. This is going through January. We always get the stats for the month before towards the middle of the month. We're in February now towards the end, and we got the stats now. 1,545 active listing homes on the market. We should have 2,100 on average. A normal real estate market should have 2,100. We're at 1,545. Should we have about a 27% shortage, give or take, 27% shortage of homes? So there's not as many homes as there should be, but it's not 50% of some of the areas in the United States, which is good, 27%. The homes are selling briskly right now. The 43% increase from December 23, I'm using the last month of 2023, December, to right now, so a month, right? We went up 43.5% of homes higher than we put in contract in December. So in January versus December, we had 43%, over 43% more contract homes go into contract with buyers. So obviously the market's back, they're rocking and rolling. Okay, price per square foot. Buyers, you should always pay attention with your real estate agent, price per foot, right? Price per foot. It's not going the right direction. It's going up, and now's the time to buy and sell for that matter. 12/23 December, $238 a square foot. January 24th, $243 a square foot. Again, December was $238, shot up in January to $243, or $5 a square foot higher. So if you're looking for 2,000 square foot, add $5 a square foot to it, at $10,000 higher on the price. Just saying, going up. Are you feeling me? It's time to buy. Don't wait for that little bit lower interest rate. You're going to lose more money by doing that. Now we're going down to days on the market. The average time in a normal real estate market is 37 to about 50 days. 37 to 50 days is normal in an average normal real estate market. Right now we're at 45 days on the market. 45 days on the market. So we have an average real estate market and an average pace that it's selling. So that's great, right? The average price sold. Everybody wants to know this number. What's the average price sold, Greg and Corbin? Well, the average price sold is $439,000 in Fresno, Madera County. $439,000. That's your average sold.
Wow. Okay. That's incredible. It's crazy to think that my first home in 2019 that I bought was $300,000, and it was a nice home, 3-bedroom, 2-bath, right by Alta Sierra. Things are just going up, and they're going to continue to go up. So,
absolutely. Yeah, those are my stats. Average home price, $439. Average price per square foot, $243. Days on the market, 45. However, the well-priced homes that we list and other people list sell within 21 days or less. Most of them within a week or two. It's a great market to buy and sell in. So I'm excited. I'm working it. We have all those transactions on the board, and we work with a great lender in Corbin. He can do credit repair. He can fix these. He can guide you for the best rate. And we're here to help you. You can call Greg at 559-260-1777 on the real estate end. Call and text me, or Corbin at 313-5819. 559-313-5819. Vero Mortgage here in Fresno. And guys, call us if you have any questions.
I appreciate it, Greg. Thank you so much for having me. Guys, if you need anything, feel free to reach out. I have a team combined of 50 plus years of experience combined just in our team of a few people. We have a great branch of loan officers too. So let us know if you need anything. We are here to help, whether it's starting and you're a year out and you need some help getting a credit repair or figuring out how to set yourself up as far as your self-employment income, things of that nature. Call me anytime. I'll be here available for you guys. It's 559-313-5819. Greg, thank you for having me on. I love doing these, and we'll do more.
Absolutely. Give us a call, guys. Have a great day. Positive affirmation. I'm not going to lie. It's time to buy.
There you go.
Talk to you guys later.
All right. Thank you. Bye-bye.